Hi, this is Alan Gassman, and we are here today to talk about the June 30 deadline for spending HHS relief funds. I think 99.9% of the people attending here probably don't have to do anything by the end of today relating to this, but we just wanted to make sure that everyone knew where we are. We've been getting a lot of questions and just wanted to answer some of these questions to make it convenient for everybody. We're going to cover what you probably need to know in the first 4 to 5 minutes here, also known as 2/10 of a billable hour in our world. And we're then going to talk about the background of the program and what we think people need to know. We're recording this. And if you have signed up for it, if you're attending now, in about an hour after 10:30, so at about 11:30, you'll get a link where you can watch the recording. So that way it's most convenient for you, and then you can send copies of these recordings to everyone you possibly know, plus people you like, people you don't like, friends from high school that you haven't seen in many years, just to stay in touch. For the CPAs and lawyers in the crowd, the presentation does not qualify for continuing education credit, basically because it's not good enough. Every Saturday at 11 o'clock, I am talking about estate planning, estate tax planning, asset protection planning. It's a lot of fun for me and a lot of the attendees, so I hope you'll consider joining us. This coming week, we're going to be talking about recent developments and hot topics, so look forward to that. Everything we're doing nowadays is on our YouTube channel. You can search Alan Gassman YouTube, and you'll find a lot of things that will put you to sleep and not be very interesting. For those of you who are involved with distressed business entities, we have a really nice program Saturday, July 10th, with some big experts as a rehearsal for a national program. And for those of you who are charitable, all 5 of you, Wednesday, July 21st, I've got some really interesting experts. We're going to talk about how the business owner can get tax advantages from being charitable. So good stuff there. Let's cut right to the meat of the situation, the June 30 deadline, page 15 here. And let's look at the bottom of the page. You've got 4 different periods, just like middle school. You had 4 periods and then there was lunch. So the first period, medical practices and medical businesses, without asking, received money into the same account that was receiving their Medicare payments. And this occurred between April 10 and June 30, 2020. And the money is to be used to replace revenues that were lost because of COVID-19, or to pay expenses that were higher because of COVID-19. And the deadline to use these funds so that you don't have to pay back anything is today. So you have until midnight tonight to find a use for those funds if you are the 1 in 1,000 medical practices who didn't already have lost revenues or expenses sufficient to facilitate the repayment. So let me go back here. We're going to come back to page 15 in a minute. But Brandon, do you want to cover from page 13 what the revenue loss means or what the increased expenses mean? So what people may need to do by midnight tonight in order to be sure they don't have to repay.
Yeah, and actually I'm going to skip forward to a slide. I think it's better explained with some other slides here on that particular issue. So there's really a step, I guess, for reporting the use. And I think the one thing important to remember here is if we put those provider relief payments into a separate account and maybe put that into an interest-bearing account, what we have to spend and use also includes that interest. So if you've had $500,000, you earn 1 or 2% interest on an account where you put the funds, and you might have $550,000 in there now. You have to report on the use of $550,000, not just the 500. If you just report on the 500, the 50 would have to be returned to HHS. So they're not just going to let you take that interest and stick it in your pocket. The other thing to remember when you're calculating the expenses is these are expenses that have to be related to the coronavirus and be increased because of the coronavirus. So there's a lot of different expenses that you can use. They include rent, mortgage expenses, utilities, but remember, those all have to be related to the coronavirus. So here's a list of some of the expenses that you can include: insurance, personnel costs, fringe benefits, lease payments, utilities, supplies, equipment, IT, facilities, and then other healthcare related costs. But remember, they have to be related to the coronavirus. So for example, if you were paying rent of $5,000 a month and you continue to pay rent of $5,000 a month, yes, rent is an eligible expense, but that wasn't increased in any way because of the coronavirus. So that can't soak up your use of the funds. Maybe you rented a small storage unit to store additional supplies, and maybe you needed additional space for testing or to administer vaccines, and you paid an extra $500 a month in rent to lease out that space. That $500 could count, but the $5,000 you're historically paying would not be countable. Same thing for supplies. You know, maybe would you look at your 2019 level of supplies compared to your 2020 level of supplies, and the difference, the delta between the two, might be your increased expenses attributable to the coronavirus. So that's one way you can calculate those. And we have to look at these healthcare related expenses first. We have to measure those first before we take them to the lost revenue calculation. Now, as far as lost revenue, and I'll flip back here to the previous slide that we were looking at, you have three options. Number one, you can look at the difference between your actual patient care revenues comparing 2020 to 2019. That difference you can take as a lost revenue reimbursement. If that exceeds your amount plus the increased expenses that you pay, you wouldn't have to pay anything back to HHS. You could also, if you had a budget that was prepared prior to the coronavirus, you can compare your budgeted revenue amounts to your actual patient care revenue amounts. The difference between the two would be your lost revenue. So what were we expected to receive? What did we actually get? That difference you can claim as lost revenue. And then finally, the third option, any reasonable method for estimating revenues. If you go with this method, you would have to explain why you're using this method, why it's reasonable. Maybe, for example, you acquired a practice and now your revenues from the prior year doesn't match up because you're at a lot more volume and you're expected to make a lot more. Well, maybe you would combine the revenues from the practice you acquired and your revenue in 2019, look at your numbers that you're actually getting in 2020 as a total combined group, and that would be your difference. Whereas just comparing back to one company's revenues would not be a reasonable method of comparison because it wouldn't accurately reflect the expectation that the business was supposed to receive. So Alan, any comments on those items so far?
Well, let's just recap this to, let me see, where was that slide? So once again, we're only talking about the money that was received April 10 through June 30, 2020. If you received $100,000 from April 10 through June 30, 2020 under the HHF Provider Relief Program, and you had $70,000 of expenses because of COVID-19, and you had a revenue decrease of more than $30,000, then you should be fine. Brandon, what if we took the 100, we got the 100,000, we put it in a special account because our accountant or lawyer told us to, and then we just left it in the account? It's earned $50 of interest, so now it's $100,050. We had a $70,000 revenue drop, and we had more than $30,000 of COVID-19 expenses. What do we do with that account? We don't really have to do anything, right? We could drain it because it would look better to drain it to repay ourselves, but we wouldn't have to, right?
Right. I don't think you would necessarily have to do anything. Of course, best practice would be to, reimburse the accounts that you paid the expenses out of, and, throw the money back into the operating account of the business as the lost revenue replacement. But truth be told, I think this is more of an accounting exercise. It's going to be reporting to HHS the expenses that you paid, the lost revenue amounts. And I don't think HHS would necessarily care that the money might be in a separate business account or that it was shifted over to the operating account. They're just going to look at the total that you report on the forms and the portal that you're going to be required to show how you use these expenses, submit documentation. That's what everyone's going to care about, not necessarily where the particular funds are sitting or if they've been moved from one account to the other.
And just to be clear, nothing has to be reported today.
Right.
It's just that the measurement period for that is today. Now, Brandon, what if I had a $100,000 revenue reduction, but I also got an $80,000 PPP loan that was forgiven?
Mm-hmm. Yeah, so that's one of the unanswered questions, I think, as it relates to all these programs, is which programs count as revenue for the other and which ones don't. We're still hoping to receive some guidance on that. But, I guess the one thing I know for sure about PPP is if you had expenses, maybe you had increased rent or you hired additional personnel to do vaccinations or to do testing, that would all be eligible expenses that you could use the HHS funds for, but you could also claim those expenses towards PPP loan forgiveness. And I know for sure that you cannot double dip in either place. So if you had additional personnel hired and you claim those wages for PPP forgiveness, you can't also claim them as a use of HHS funds that would reduce your repayment obligations. So you can't double count in any way. As far as how that impacts your revenue calculations, not entirely sure the answer to that question. But I think if we're looking at it from we just can't double count expenses, I'm not so sure that it would impact the revenue calculations, but that hasn't been confirmed in any guidances so far.
And then if you paid income taxes on the money you received, you can count that as an expense for this work.
Yeah, and that is an important point too, that these HHS provider relief payments are taxable. It is taxable income, unlike the PPP loan forgiveness. The expenses are going to be deductible because it is taxable income. And as Alan mentioned, that tax payment could be considered an increased expense.
Okay. What if I need a big Cadillac Escalade to give me better ventilation when I drive around with my spouse who also works in the medical practice, so it's less likely that we would get COVID-19 from each other?
Yeah, I think that would be a little bit of a stretch, and I think we got to be careful about how we're spending this money and the items that we are spending it on. We want to make sure that it's being used the right way for the right purposes. Yeah, the rules are a little arbitrary, and maybe you can stretch it a little bit, but I think buying the Escalade for ventilation might be a little too far. So let's make sure we're careful and we are being reasonable with what we're spending the money on.
What if I call my air conditioner contractor today and send them a check or even a wire for what they're going to charge me to put a new air conditioning system in next month?
Yeah, I think that would certainly be something that you could consider, particularly if you need to use a little bit more of the funds. There's specific guidance and some frequently asked questions that talk directly about ventilation systems, installing the HEPA filters and the UV lights that would block any bacteria, germs, et cetera, from coming through ventilation. All those are reasonable expenses, and they are deemed to be related to the coronavirus. So if you need to spend a little bit of money, call that HVAC person, tell them you need a new unit. Here's the check today. Come take care of it when you can. So you're making sure you're using the funds by today.
Now, here's an excellent question from Diane. If the practice is an S corporation, then the shareholders pay the tax on the money they receive, not the company. Is it still an expense? Is at least arguably an expense that would have to be paid? I mean, that would count.
The guidance isn't clear on that, but I'm not so sure that since the shareholders are paying the tax that you could consider that an expense of the company. So I think that's for S corporations and partnerships, it's a maybe, probably leaning towards no, that wouldn't be an expense. But if you're a sole proprietorship or you're a C corporation where the actual business entity would maybe pay the tax, that looks something more like it would be considered increased expense. Maybe we'll get some additional guidance on that because it seems unfair to treat different types of entities differently. But as we've experienced with PPP and some of the other programs, there are circumstances where different types of entities are treated differently, even though I don't know that was necessarily congressional intent.
Okay. By the way, we published an article on this yesterday. So Kelsey, if we didn't get that article out to all the attendees, let's go ahead and get it out to them. So Brandon, I'm going to go to page 16 here. So I see that this period 1 can be reported as early as July 1. So my thought is, as opposed to waiting for guidance that may hurt you, you should just apply July 1 and take every position that is to your advantage. That would be my advice. I wouldn't wait too long because guidance usually doesn't help.
Yeah, and we've experienced that with the PPP as well. You know, as more and more guidance came out, it got more and more restrictive. So there's pretty significant guidance released on HHS. There's a long list of frequently asked questions, and a lot of the answers are provided under that guidance and the frequently asked questions. But there's still some things out there that we just don't know. So as Alan said, as long as you're taking a reasonable position and you know it's not directly contrary to any published guidance, then yeah, get those applications submitted, go and submit your reports. And as we saw with the other programs, if you submitted something before guidance changed, you could rely on the guidance that was in place at the time and wouldn't necessarily have to go back and correct an application or correct reporting of the use of the funds.
Okay, so let's go through some questions here. And by the way, Diane, thank you for the second response, and I hope that we're right. Okay, this is from Fred, a very, very smart CPA practice manager. What is the time frame for calculating lost revenue? Can you use the 6-month period ending June 30 versus 2019 or versus budget?
Yeah, and if you flip to slide 32, they actually published guidance on what those timelines are. So it's your difference between 2019 and 2020, or the difference between your budgeted 2020 and your actual 2020 revenues. I think Fred's question might fall under an alternative methodology under number 3. You might be able to use that 6-month period, but then you would have to write an explanation as to why that's reasonable, why that loss was attributable to the coronavirus. I'm assuming that's really the portion that would impact that your business was impacted by the coronavirus is why you'd want to use that 6-month period. I think the counter argument to that would be what happens if the business was very profitable the next 6 months and they made up a lot of that lost revenue because there was a lot more people coming into the office worried about being sick, etc. You would have to come up with an explanation as to why you're using just the 6 months versus the entire year. But you might be able to fall under number 3 for using that 6-month period.
All right, this is from Kimberly. Can we report just through June 31st for period 1? I would think the answer to that is yes.
Yeah, you just report, the money that you received during that time period, the dates, the April 10th through June 30th, and you report the use of those funds only by at least September 30th of 2021. If you got subsequent funds, maybe in August or September of 2020, then you don't have to report the use of those until January or spend those until December 31st.
But in other words, you can close the period earlier and then use the next period.
Yeah.
So that makes sense. Okay, here's another one from Fred. Does the app, or actually no, I already asked that. Is there anywhere we can see a sample report so that we can see how it works and what needs to be submitted? That's from Session.
Yeah, as of right now, no. The portal isn't even opened yet. No one's seen what it's going to look like. I think it's supposed to open today or tomorrow. So once that is open, we will be able to get a better idea of what that looks like and what information you might need to provide. We do have some slides that list all the questions that they're expected to be asked and all the data that you're going to have to include with the application. Most of it's related to the business, the EIN numbers, the owners of the business, the amount you received, what you spent it on. Do you have subsidiaries that also receive payments? What other type of assistance did you receive? Did you get a PPP loan? Did you get retention credits? Did you have insurance that maybe reimbursed you for your casualty loss? All those are going to be questions and information that you're going to have to report on.
Yeah. Okay, Joshua has a good one. See if you remember the answer to this. HHS funds used greater than $750,000 require a single audit or program audit, correct? Is that correct?
Yeah, that is correct. There's guidance on those single audit guidelines. I'll have to be honest, I'm not entirely familiar with what exactly they are, but I do know that there are single audit guidelines out there, and that if you're over a certain dollar amount, and I'm sure $700,000 is over that amount, that you are subject to these what they're calling single audit guidelines.
Now, Session has a great question here. Suppose I build a new facility. I make changes to the design based on lessons learned due to COVID-19. Can we apply the extra expense towards the funds?
I would think so. Yeah, I think that's, something that you've done that's attributable to the virus. It's certainly, I think we would all change the way buildings are designed and how HVAC units are installed now that we know a whole lot more about ventilation and airflow, and I think that would be something that would be reasonable.
Okay, Nikki had a question. Is the portal to register still down? Has anyone had any issues? I don't know if the portal came up or not. I don't think it did, or I would have heard.
Yeah, I haven't heard anything on that, so don't have any information there.
Okay. Then Fred had another question. Let me find Fred's other question. Just to be clear, does the PPP money get included as revenue or not under these rules? And the answer is, it's unclear.
Yeah, we just don't know on that. And I see the way he's saying if we submit our application now, well, there's no guidance that says it's not, and then later it turns out that it is. Do we need to amend our filing? I think it would depend on the way that guidance is drafted. If it just is a blanket statement that it is revenue, then I think that would require an amendment to the application. But if it's something that it says, if you've already submitted your application, you don't got to worry about it, like a lot of the guidance has said, then maybe you wouldn't necessarily have to amend that application. But it would just depend on the way that's worded in the guidance that's issued.
Okay, here's Vicky says, we actually ended up with a revenue loss last year due to switching our model of care. We want to return the HHS funds. Are we going to be able to do that through the portal? Oh, I'm sorry, they had no revenue loss, and I guess they had no extra expenses, so they want to return the HHS funds. Well, first you should pay your lawyer and accountant for determining that you should return the funds, and make sure you know how much income tax you paid because of the funds, and then only repay what's left after that.
Yep.
And how do they repay it? Is that in $100 bills in a paper bag or by wire?
If you go to the HHS website, there is a section in there that talks about how you return the funds and where those need to be sent. And you would still be required to report on the use, just to report those increased expenses. As Alan mentioned, you could at least use some of the money, I think, for certain items, and then return the excess under that published guidance.
Okay. Deborah says to report for reporting purposes. I'm sorry, where was Deborah? For reporting purposes, can we apply COVID-related expenses, then lost revenue, and then use infection control expenses last? I want to confirm that COVID-related expenses does not include infection control expenses. I would think that it would include infection control expenses, Deborah.
Yeah, I agree, Alan. I think you would include your COVID expenses, your infection control expenses first, and then go to your lost revenue. The guidance says expenses come first, and then the excess can be lost revenue.
Okay, a couple of questions. Yes, we had intended to send these slides out before the presentation. I apologize that apparently we didn't, but we'll be sending them very soon, and you'll automatically get them in about an hour. In addition to that, here's another question. Can I submit my registration or my report before the reporting period assigned? Can you report early?
I don't think that you can. I think you have to wait until that your period opens up. I don't think they'll allow you to report on anything early.
Okay. So I think here we are on page 10, and just imagine the life of a certified public accountant last year and this year, doing their best to help clients deal with all these questions. You had the PPP-1 program, You had the PPTP2 program. Many clients still can go back and get money for the employee tax retention credit. That's still out there, especially for first and second quarter 2021. Then you had the HHS provider relief, you had the EIDL, and you had the EIDL loans. Now, a lot of clients that we've talked to who quickly got that 3.75% EIDL loan, that doesn't impact your HHS credit, but for many of you, just pay the thing back. There's so many strings attached to that EIDL loan. You're paying 3.75% interest. They're supposed to have a lien on all your assets. You're not supposed to be paying dividends or distributions or bonuses without their written consent. I just think you pay that one back. On Brandon, what are the words of wisdom on the employee tax retention credit for quarter one and quarter two? You need a 20% revenue decrease from what calendar quarter to what calendar quarter? Because this is easy money for a lot of small businesses.
Yeah, so you look at the quarter that you're intending to qualify. So you would compare quarter one of 2021 back to the same quarter in 2019. So you're looking at quarter one 2021 compared to quarter one of 2019. Alternatively, there's a second test where you can use the prior quarter of the quarter that you're intending to qualify in. So if you're in the first quarter, you can compare your fourth quarter of 2020 to your fourth quarter of 2019. And I think the key rule to remember is we're always comparing the same quarters, just the prior years. So where you hear someone refer to the prior quarter rule, you can't compare Q4 receipts to Q1 receipts. It always has to be Q4 to Q4, Q1 to Q1, Q2 to Q2, so on and so forth. But I think that prior quarter rule is very important to understand, because in the event that we do get guidance that says, maybe the PPP loan forgiveness is a receipt for ERC, or maybe the HHS provider relief funds are a receipt for ERC, we could plan around that. And say we get our loan forgiveness in the second quarter, but our first quarter was a 20% reduction. Well, even though our second quarter doesn't qualify, we can look back at that prior quarter and we can see that we do qualify because we had a 20% reduction in the first quarter. So maybe you consider, if you haven't submitted your forgiveness application yet and your second quarter is looking good, we hold on to that and don't submit it to the third quarter, because we can, when we're in the third quarter and we get our loan forgiveness amount that might be considered revenue, we don't know the answer to that or not, that would put us over the 20% reduction. We can look back at the second quarter and still qualify for the retention credit because we had a 20% reduction then. So that might be a useful planning idea and something to keep in mind.
Okay, if you want more detail on how this HHS program works, we did a 60-minute talk a few months ago for an organization called the CPA Academy. So if you Google the CPA Academy, sign up, you can get a free membership to the CPA Academy. You don't have to be a CPA. And then you can see this program, and it's completely free of charge. And we have a lot of other programs on the CPA Academy website. So that would be one way to learn more. We'll probably come back next week, maybe the same time, same day, and answer more questions. We welcome all questions, comments, and suggestions. Thank you, Brandon, for being the brains behind the operation here. You remind me of the great Karnak on the Johnny Carson show. I just want to hand you envelopes so that you can open them and blow in them, pull the question out, and answer it. It's great, and you don't even have to wear the Karnak hat, so that works well. Thank you again. I hope everybody has a fantastic day. And remember, this would be a great time to pay legal and accounting fees by midnight tonight, attributable to HHS, to make sure you get all your expenses paid. Any final words, Brandon?
No, I think I'm good. That's it for me.
Yep. All right. Have a great day. Thank you and goodbye.